Okie dokie, today we're talking about a foreclosure crisis. Yes, I try to talk a little more entertainingly than the other real estate people on YouTube. I apologize for my voice inflection. So, a foreclosure crisis, yes, it is incoming. What every investor needs to know about it. Here's the deal, people. A lot happens in foreclosures, and we're going to go through what a foreclosure is defined as, how long it's supposed to take, and then we're going to go through what actually happens. This is part one. We'll go to part two that actually has charts and data and etc., probably tomorrow. So here we go. Let's get into it. Before I start, hey, go ahead and like this video as quickly as you can. Subscribe here and leave a comment down below if you feel I missed anything. All right, here we are. Alrighty then, in this video we'll discuss what is the foreclosure process, what actually happens, and what happens to prices during it. We're going to go to a definition of the foreclosure process and a description of what actually happens. And here it is from Investopedia, the 6 phases of a foreclosure. What does a foreclosure mean exactly? Blah, blah, blah. Okay, part one, payment default. So the owner of the house decides they don't want to make the payment or they can't make the payment, and they go ahead and don't make it. The second thing that happens, the servicer, the loan, the note holder, whoever gives them a notice of default. Hey, you missed your payments. It's, 90 days later. And, we're going to give you 90 days to settle the payments. So this is where people say it can take 6 months to a year for a foreclosure to go through and for a foreclosure crisis to start. That is not the truth. Stay tuned. Towards the end, we'll go through what the actual truth is of foreclosures. And let's go ahead and finish up what it is. Notice of trustee sale, blah, blah, blah. After 90 days, they start selling it. They sell the house. Yeah, real estate is owned by the bank now, and we're going to go ahead and evict. And the bottom line is that throughout the foreclosure process, many lenders will attempt to make arrangements for the borrower to get caught up. This is why it can take up to a year, 2 years, heck, 3 years sometimes for a foreclosure to actually go through and the current owner moves out of the house. We'll go to a chart later on that kind of shows what happened back in 2008. And I'm going to go ahead and make a prediction of the likelihood of that happening again with some visuals. All right, so you figured out what foreclosure process is defined as and what everybody thinks it is. Now we'll go to what it really is. So we looked at what you think a foreclosure is, and this is what actually happens. When owners can't make that first payment, they're doing something before that. They're scrambling to sell their house. Many homeowners realize they're not going to be able to make that payment. They want to sell the house. The market's really good right now. I can still get out and make all the money that this house is appreciated, even though I've lost my job and can't make my payment. So they go ahead and try to sell their house. The thing is, in the current economic climate with a high unemployment rate, there's a lot of people that will do this all at the same time. So they'll try once their forbearance runs out, that's been extended on FHA loans. We talked about those in a previous video. Go check that one out. Through the end of the year. So a lot of foreclosures can't even take place until 2021. But what'll happen? These owners will scramble to sell because they know that they cannot make their payments. They cannot continue to pay this mortgage once their forbearance runs out. You'll see houses come on the market just below market value, expecting to sell quickly. Some of them will, some of them won't. The people that get stuck holding the bag on their house will have to continue to reduce the price of their home until it sells. The problem is, when the home gets below what they owe on it, let's say they bought it last year for 3.5 down on an FHA loan. So now they have to discount their house 5% or 10%. Well, guess what? They're underwater. I'll go ahead and put a picture of what being underwater looks like right up here. So now they can't make their mortgage payment, they can't sell the house, and they don't have the money to come up with. Should they sell the house, they're going to end up owing something on this loan. So those people that got stuck holding the bag are now going to miss their payments. It's going to cause them to lower the price of their homes more. Those who have equity will continue to lower and lower and lower until their home sells. Eventually it will sell, but at this point the banks know that there's a crisis incoming and they stop lending to people like they did in 2009. So this continues on with lowering of home prices and nobody's buying them until some owners just walk away. Like I said previously, in a previous video anyway, I've seen this happen. I watched my neighbors say, hey, I haven't made my mortgage payment in 2 months. I'm walking away from this house. Before the bank foreclosed on them, they just moved out. So then you have homeowners that aren't fighting a foreclosure. They let the bank take the house and it happens as quickly as possible so that they can get it off of their balance sheet. So these owners that walk away just want the home gone. So the bank goes ahead and forecloses on it, and it's 6 months and they have it foreclosed on. But all of this stuff has happened between 0 and 6 months. So the home prices have been coming down. Now, guess what? The bank has this house. Prices have come down. It's below market value for the amount owed on it. Or, strike that, reverse it. The bank can't sell it now because the market's gone down and there's more owed on the house than they can sell it for. So they kind of hold on to the house. They don't sell it. They wait for the market to come back up. Then you have the effect of some owners fighting. Some don't want to give up their home, so they continue to pay the minimum or they fight the foreclosure, and it extends on for a year, 2 years, 3 years, until finally they foreclose on the house and they are forced to leave. Throughout this whole process, when this starts happening, it's not 6 months, people. It is immediate that you start seeing effects on the property and prices. And this happens nationwide in a crisis, like we're in right now with high unemployment where people cannot pay their bills. So hopefully that's an in-depth enough explanation of what happens in the actual foreclosure process, because it's not 6 steps. It's actually 1, 2, 3, 4 plus 6 is 10 steps where prices begin falling, and then it becomes a crisis because everybody owes more, including the banks, than they can sell the home for. Okay, we're going to go to a slide on what happens to prices. So this is the price slide, and step 1, you see prices peak. They're not going up anymore. They flatten out. You have a month or 2 of this because everybody's like, oh, hey, look, that house is just under market value. I'm going to go ahead and buy it because it's going to keep appreciating, blah, blah, blah. I'm a smart investor. No, you're not. You're going to see the prices peak, and then you're going to see the prices crack. Everybody on this channel knows this now, so you won't get stuck holding the bag. Once the prices crack and you get all of these people here missing payments and scrambling to sell, that's when you see a downward trend begin. This downward trend will continue. Houses will continue to sell because there's still money out there trying to purchase houses because it's going to appreciate. I just think it's going to appreciate. I have to get this house. So anyway, you get people picking up houses all the way down, catching the falling knife, as they say. And then all of a sudden people realize, hey, we are in a downward trend, and they stop buying. Then you see prices plunge. While prices are plunging, more and more foreclosures are coming on the market, and prices continue to drop. We'll go to a chart of home prices. The Case-Shiller Home Price Index, original and inflation adjusted, just so we can be fair here. What we see here is our housing bubble in the GFC going up and then crashing all the way down through 2012. So this whole process happened at some point. Okay, here's the deal. When we zoom in on this chart, hang on here. This is where we're at now. We're way up here. We're way above our bubble prices. We're right at them if it's inflation adjusted. Great, good for inflation. All right, great, good for no inflation. Look at that. We're way up here. We're way above where we should be for home prices. So anyway, zooming in on this, here we go. We're going to go through it step by step. Okay, step by step. We went up and built into the bubble. We can see the bubble right here. It's pretty obvious. There we go. And it popped and it came down here. So what happened? We built up, and then it peaked right here, 2006. I happened to buy a house right about here, so I got a little bit below, but you can see what happened in the next couple years. My house ended up down here. This is actually how I became a real estate investor, because I realized I got stuck in the house right here in 2008. So I went ahead and rented it out instead of just walking away, and boom, I am a real estate investor. This will happen to other people during this bubble. Okay, anyway, so prices peaked here and then they cracked and then they went down a little bit like we talked about on our slide. Oh, hey, the foreclosures are hitting the market. People are scrambling to sell. Oh, there we go. And then all of a sudden, prices plunge. That is what happens. They go up a little bit, and then they go down. Then they go up a little bit, and then they go down. And it just keeps going until they hit a bottom. So they hit the bottom here, and then everybody's now foreclosed. The market has cleared on foreclosures, and it begins to rise again. Now we get to the point we're at today where we're up here and, well, here if you adjust for inflation. But anyway, so real prices are here and inflation non-adjusted, I guess, are right here. So what ends up happening when this cracks, oh, that looks like it's kind of peaking out. This is July. Oh, we got to go over to September, which we're over here in October now. I'll link a video to the October housing market up here. Go ahead and check that one out. But when this cracks, we will see this happen. They're holding off foreclosures. So what ends up happening now that we have an even larger amount of pent-up foreclosure rage, when that hits the market, these people begin to scramble to sell. They cannot foreclose on an FHA-backed home. These are riskier, I would say. FHA, Federal Housing Administration, insures these loans and have put a moratorium on evictions till December 31st of 2020. So January 1st, 2020, these people are all going to try to sell their homes because they can't make the mortgage payments. It's something like 10%. I'll do another video on the percentage of homes in forbearance, et cetera, so we get accurate numbers on that. So you have a possibility of 10% of FHA loans going for sale. Anybody that owns an FHA house or a house that is FHA insured, has an FHA mortgage, is going to try to sell their home if they have it in forbearance. So you see this big bunch of starter homes hit the market, which is great for rental investors. And a lot of times you can negotiate a deal. We'll put up a video on this later too, where you keep the person in the house and they pay you rent. You take over their mortgage payments and they pay you rent. Then you take ownership of the house, which is a good way to go. It keeps them in the house and you pick up a property. Okay, so that's what you'll see happen with prices. So January 1st, people are going to try to sell their homes, probably more like towards the end of December, because they cannot make that next mortgage payment and or don't want to, and they realize, hey, the housing market is so booming. It's such a good housing market. I can go ahead and sell this and make a ton of money. So you see a ton of houses come on the market in December because of the foreclosure process. The foreclosure process, it starts right before the person misses a payment because they try to sell the house. Okay, now that we cleared that up, we'll go and finish up this video. Go ahead and subscribe right here so you don't miss part 2 with the charts and how it's actually going to happen, how many houses are going to hit the market. And again, this is October 2020. We're looking at 2 to 3 more months before the foreclosure crisis hits. Okay, there's another video here. And subscribe up here. All right, hey, y'all, take it easy out there. We'll talk to you later.